When it comes to capital spending on AI-optimized data centers, we're talking about truly massive numbers. The majority of that spending will flow directly to NVIDIA, but AMD and Broadcom are also positioned to capture meaningful market share in the data center space by 2026. That raises the key question: which AI stock is the best buy right now? In this video, I'm comparing NVIDIA, AMD, and Broadcom to determine which one I believe offers the best investment opportunity heading into 2026. Four companies are expected to do the heavy lifting here, collectively spending around $400 billion on AI data centers. Those companies are Amazon, Microsoft, Alphabet, and Meta Platforms. Each of them has already communicated these spending plans directly to investors, and I've covered in previous videos when management teams outlined their projections for 2026. What's important is that these estimates have continued to rise over the last 6 months and are already well above what analysts initially expected. Looking at recent history makes this even more interesting. These same companies gave capital expenditure estimates for 2025 that seemed almost unbelievable at the time, yet the actual spending ended up being $20 to $50 billion higher than initially forecast. Amazon alone exceeded its original 2025 estimate by roughly $25 billion. So while $400 billion for 2026 sounds enormous, there's a real possibility that the final number ends up significantly higher. In my view, the risk around these projections is skewed heavily to the upside rather than the downside. AI technology is advancing at an incredibly fast pace, its effectiveness is improving rapidly, and the cost of falling behind competitors is simply too high. On top of that, many of these companies have already locked in orders for 2026. Canceling those orders would likely trigger penalties in some cases, potentially totaling billions of dollars. Increasing orders, on the other hand, generally comes without penalties, and in many cases may even result in discounts for larger commitments. That's why I believe the upside risk to 2026 spending estimates is far greater than the downside. A large portion of this spending will ultimately go to NVIDIA, particularly its GPUs powered by the latest Blackwell architecture and the upcoming Rubin platform, which are designed specifically for accelerated AI workloads in data centers. NVIDIA currently controls an estimated 80% to 90% of this market. AMD has recently launched its own competitive GPU offerings and is steadily gaining traction, while Broadcom is capturing share in the ASIC segment, application-specific integrated circuits. Broadcom has formed partnerships with companies like OpenAI for custom AI chips, and Alphabet is also working with Broadcom, even as it continues to deploy its own tensor processing units. The common theme here is diversification. These hyperscalers are actively trying to reduce their reliance on NVIDIA, especially given how dominant the company has become. And that dominance is clear in the numbers. From 2023 to 2025, NVIDIA's revenue surged from 27 billion to 131 billion, overtaking both Broadcom and AMD, and firmly establishing NVIDIA as the largest player in the data center space. Broadcom has also delivered strong revenue growth, and I expect AMD to gain meaningful market share going forward. The key reason is simple. These massive customers don't want to depend too heavily on a single supplier. NVIDIA's products are essentially sold out, and the company is generating gross margins of roughly 75% on its hardware, levels that are almost unheard of in the technology hardware industry. That creates a strong incentive for customers to bring in alternatives like AMD and Broadcom to diversify supply and reduce risk. Over the past decade, NVIDIA has delivered a 45% compound annual growth rate, with growth accelerating even further over the last 3 years. AMD has posted a 26% KGR, while Broadcom has grown at 19.7%, the slowest of the three despite being the most aggressive acquirer, especially with its recent VMware acquisition. Next, I compared these companies based on return on invested capital, and once again, NVIDIA stands out. Its ROIC is approaching 110%. While I don't believe that level is sustainable over the long term, it can absolutely persist over the next several quarters as the industry continues to evolve and competition ramps up. There's even a possibility that Intel eventually emerges as a sleeper competitor, though I haven't included it in this analysis. Broadcom's return on invested capital has declined, largely because of the sharp increase in invested capital tied to the VMware acquisition. Over time, as synergies are realized, I expect Broadcom's ROIC to recover and move back toward 20% over the next 12 to 36 months. For AMD, I also expect ROIC to rebound toward historical levels. I wouldn't be surprised to see AMD exceed 30% ROIC starting in 2027 or 2028, especially after signing several $billion worth of orders for its accelerated computing products deployed in AI data centers. I also looked at cash flow from operations relative to sales, and once again, NVIDIA leads. Its cash flow to sales ratio has climbed to 49%, up from 23% in 2016. Broadcom remains highly profitable, but its margins and cash flow have been temporarily constrained by acquisitions. That's typical. Acquisitions often weigh on profitability in the short term, but can significantly improve results over time if executed well. Broadcom has a strong track record of disciplined, well-integrated acquisitions, unlike many companies that overpay or fail to realize synergies. AMD ranks last on this metric, but its trend has been improving, and I expect that improvement to continue over the coming quarters and years. Across all three key performance metrics, market share, returns on capital, and cash flow efficiency, NVIDIA clearly leads. What's surprising is that NVIDIA is also trading at the lowest valuation of the three. Its forward price-to-earnings ratio of 27 looks attractive for a company with NVIDIA's growth outlook, competitive moat, and industry leadership. Broadcom trades at a forward PE of 34.4, while AMD trades at a higher forward PE of 40, despite still being early in its profitability recovery and facing headwinds from weaker gaming and PC segments. I also ran a discounted cash flow analysis. Based on that, I estimate NVIDIA's fair value at $199 per share, compared to a current price of $189. There's additional upside potential as well. NVIDIA recently announced roughly $50 billion in orders from Chinese companies for its H200 chips. That clears the second of three steps required to complete those sales, the final step being approval from the Chinese government. If that approval comes through, I estimate NVIDIA's intrinsic value could be 20% to 30% higher than current levels. For AMD, my intrinsic value estimate came out to $193 per share compared to a current price of $223. Given the uncertainty around how much market share AMD will gain in 2026, I would consider the stock fairly valued to slightly overvalued, especially when applying a margin of safety. For Broadcom, I calculated an intrinsic value of $375 per share versus a current price of $348, which puts it in the fairly valued to slightly undervalued range. Let's have a look at analyst recommendation. NVIDIA has 12-month median price target of $250, which roughly 34% gain from current price. AMD has 12-month price target of $274, representing around 23% gain. And lastly, Broadcom has 12-month price target of $458, which will yield an approximately 33% gain from current price. In this section, NVIDIA and AVGO goes head-to-head, but NVIDIA represents much better quality stock and competitive advantage with their product. When you combine performance metrics, valuation, competitive advantage, and leadership, NVIDIA comes out on top. Jensen Huang is widely regarded as one of the strongest CEOs in the technology sector. While Lisa Su is also an outstanding leader at AMD, NVIDIA still has the edge in execution and vision. NVIDIA leads in every major performance category and is trading at the most attractive valuation based on both market multiples and discounted cash flow analysis. For me, that makes the conclusion straightforward. NVIDIA is the best AI stock to buy for 2026 and beyond. This is not a financial advice. I just represent you fact-driven, nice investment opportunity. Happy investing.